is economic. The latest wholesale price inflation numbers are out. And Priyanshi, what do we read from this?
Sonia, it is at an 18-month low, and there are many positive factors to look at, but also some negatives. And let's also tell you what this really means for the common person. Well, wholesale price inflation has fallen to an 18-month low. It's at 10.7%, which is the lowest since March 2021. The wholesale price inflation has fallen for the fourth straight month. The wholesale price inflation in September is at 10.7%, which is lower than the 12.4% figure that was reported in August. Food inflation has also fallen from 9.9% in August to 8% in September. But it's not a comfortable situation just yet. It's a way to go to pat our backs on this. Remember, this is a lower inflation rate compared to very elevated levels. Wholesale inflation has been in the double digits for 18 months, and this time it reported in double digits for the 18th straight month. The highest inflation is in the fuel and power category at 32.6%. So what this essentially means that the prices of fuel and power and these wholesale products have changed this much percent compared to last year, September 2021 to now. There's also been a 50% surge in potato wholesale prices year on year. Now, to get more clarity, what is really wholesale price inflation and how does it matter us? Wholesale price inflation reflects the rise in the price of wholesale goods and input prices compared to a year ago to now. But experts say that WPI inflation rate fall will likely not affect retail inflation significantly because this only impacts input prices, while the transport prices continue to remain high, and manufacturers and wholesalers are likely to not pass on this benefit to consumers because they're already incurring losses and facing high transportation costs because of high fuel prices.
Right, Priyanshi, interestingly, the minutes of the last meeting of the Monetary Policy Committee is out. So it shows that there at least the governor, RBI governor, is determined on one path, but there's some dissenting voices now.
Right, Sonia, there is some contradiction within the Reserve Bank of India. There have been the minutes of the meetings released. This meeting was held from September 28th to 30th, and that's when the rate hike was announced. To control inflation, RBI has been hiking interest rates for the last few months, and RBI's minutes of the meeting say that one RBI Monetary Policy Committee member has warned against more rate hikes. Professor Jayant Verma has said that MPC should now raise the policy rate to 6% and then take a pause. For reference, the policy rate is currently at 5.9%. So Professor Jayant is recommending that it should only be taken to 6% and then there should be a pause. He has warned against unreasonably high real interest rates and said that these could affect growth. On the other side, the RBI governor feels the opposite. He voted for a further withdrawal of accommodation to control inflation, which means that more rate hikes are likely. And while all of this is going on, while there are negatives on the economy, the markets today gained over 1%. Markets gained following global peers. The Sensex gained 685 points. It ended at 59,920. Nifty gained 171 points and ended at 17,186. This happened as the markets digested a 40-year high US inflation. It's really confusing for some, but experts say that markets might be assuming that since US inflation has went to a 40-year high, this might be the peak of inflation and inflation might be coming down after this. That is why the markets were positive and Indian markets followed that cue.